Welcome into a brand new episode of WSI TV. Enjoy the show.
Hi guys, welcome back to WSI TV. Today we are going to be doing a market update for you. Today we unfortunately could not be joined by Jim Sampson. He was away from the office today, but we do have, of course, our market analyst Leah Warren in-house. She's going to be talking about the general state of the market for you this week. Before we get into that, I do want to remind you to go to WSITV.com. There you can sign up for our free daily newsletters and you get instant access to the WSI vault. So I think we're just going to jump right into it. Leah, do you want to tell us what is going on in the market this week?
Absolutely. So right now you can see that we have the S&P 500 up as usual. And this week we're showing you the daily chart, which is a little bit more unusual. We've also got our regular 40-week up for you in a minute. But right here we have the daily chart because there has been some significant movement just in the last week. And it's better seen on the daily chart. So the S&P has started to drop a little bit.
Yes.
It's dropped 3%. It closed on Friday at 3,225, so back below that all-time high that we've seen it riding for so long. And so a lot of analysts are panicking a little bit, expecting this to mean the beginning of the end. And it is definitely a correction, but we've been saying for several weeks now that we've been expecting a correction and that that's actually a very healthy thing for the market. So just behind us we have that daily chart, and you can see here is the correction. You can see that it's dipping down towards that blue line. But what we are actually probably going to see is it dipping towards this red line underneath. And this is what has all the analysts and Wall Street professionals freaking out because they're, again, looking at the daily picture. They're not looking at the big picture. So this is a significant drop if we're looking just at the last few months. But we've also got our regular chart here. There's that drop. And we're moving back up today. So
Exactly.
even though it looks a little bit dire when you look at it up close, we've only had 2 weeks of negative movement, and it looks like we're off to a steady start this week. And even if we weren't, we see that we have a long way to go before we would bounce off of that line.
Exactly.
Because this is where our support should be, is this line down here. And we've got a lot of space for just kind of wiggle room on what's healthy and what's not. It's only unhealthy if it drops below that line, as we know. So.
For sure, yes. And I mean, we are still in our bull market, of course. We will be the first to know if anything with that status changes. But Jim did say a couple weeks ago that we're looking at this in terms of what's happened already. Looking at this chart, like you said, in the daily chart, you don't get this overview of what's happened in the past, year or 2 years. So if you go back to the weekly, you can see that we have this rise up here in 2018, which actually looks a lot like this one that we saw towards the end of 2019. But then you had that death drop down to the 40-week, which probably spurred this huge selling volume that you saw right here, which again, we're going to be looking at the volume very soon. But then you bounce right off again, and this started another rally right here that lasted a couple months. So we're looking at this in terms of we're going to react to what the market is doing, but right now, even if we do drop even more down to this 40-week, I'm expecting it to do this bounce just like we saw there. And if it doesn't, we're going to react accordingly that way too. But don't get ahead of yourselves, I guess is what we're going to try and say here.
Yeah, no, absolutely. This is no reason to panic. This is actually very, very healthy movement. We want to see that bounce. You can see it a little bit back here where we saw this really strong start that led into the rally that we've seen with our bull for the past few months. And so if we're seeing that again, that's a sign of steady, healthy correction that's going to lead into a stronger market in the future.
For sure.
Yeah, so it's all looking good. And then on the side of volume that you mentioned, Taylor, we do see this really high selling volume. That's when we see these bars down at the bottom here. When we see it in the red, that's selling. And when we see it jump like that, that is market panic. That's everybody thinking that the bull market has ended, that their shares are in trouble, and that they need to get out.
Yes.
And that's usually after the trouble has started, or it's in a situation where there is no trouble, or there just thinks there is.
Yes, it's the boy who cried wolf. Yeah,
absolutely. So here you can see there was that panic, but then the day or the week after it, it went back up, and we were good to go.
Exponentially so. Yes. I mean, and we do look a lot at this selling volume because we're going to see it again in terms of this bottom right corner also when we do have those two red bars, but we do have data to prove that not only are people scared of this downturn, even though it's less than 5%, they rush to bonds, your safety trades. You jump out of stocks and they jump into safety trades immediately. And so you see kind of this false movement in these huge stocks that we're looking at, not necessarily just stocks, but just in commodities like bonds and things like that, that your portfolio's, you know, kind of misleading in terms of when you're looking at it in terms of the general market and all of the investors around you, because you may think that, oh, bonds are getting a spike, I need to get into bonds. Not unproportionately, I think, is what we're trying to say.
Yeah, no, absolutely. And if bonds are spiking, it's probably because everybody's thinking the exact same way as you, where, oh, if bonds are spiking, I have to get in them, which is kind of what's happening right now. We've seen bonds are actually having higher returns than a lot of stocks right now. And that's only in the last week or so.
That's highly unusual.
And it's very unusual, and it probably won't last very long. But also, if we're going to look proportionally at the selling volume, yes, this is higher than we've seen for the start of the year, but this is still way lower than a lot of what we've seen. It's actually been a little bit quiet on the buying and selling.
Yes, yeah.
As we started 2020, which is fairly normal. There's usually a little bit of buying exhaustion at the start of the year. But everything's looking good. Don't listen to headlines when they start to panic. If it does continue to drop, it's healthy. We've also, if you look at the NASDAQ, if we look at another standard that we follow, it's actually up 2% this year so far. The Dow is down about 1%, but that's 1% decline in January. That's not a lot. And the NASDAQ more than makes up for it with that 2% gain that it's seen already this year. And a large part of why the NASDAQ is doing so well is because of the tech stocks that are there. Because tech is still doing so well, it's going so strong. We actually had an episode about it about a week ago.
Yes.
Because it is one of the biggest growing industries.
For sure.
So basically what we're saying is just don't panic. Everything is fine. Everything looks good. We did have that little bit of a wobble here, but again, we've been saying that we want that because constant upward motion for a long period of time isn't healthy in the market.
Well, it's not sustainable either. That's the thing, is the investors that are panicking are kind of right to, but not in the extent or the context in which they're doing it. I mean, you should be a little trepidatious when it comes to something that's flying this high for so long because it's not supported. And that's essentially what it means by support when we say that it's kind of like you're climbing higher and higher on a tree in a really windy day. You have nothing holding you down. So you're more likely to obviously fall. Absolutely. And the higher you go, the higher you have to fall, and that's where that fear comes from. But you will be the first to know if you do have reason to move out of the stock market and, you know, kind of keep your cash close to your chest. But we've been looking at earnings season, and we've been watching the huge companies, both tech and outside of the tech sector, that, I mean, it's kind of been subdued buying, but we're still seeing good reports.
Absolutely.
So it's kind of a bit of a dichotomy there, but it's not anything that's raising concern.
Yeah, no, definitely. And we have to remember that the year's just started out. We were in the third day of February.
Yes.
It's very early on. And then another thing to note is that there are a lot of factors that could be positively contributing to our stock market in the future. One of the big ones is the state of China right now. Everything that's happening over there with the coronavirus is very, very dire, obviously, and we're all very concerned. Thankfully, countries are taking proper precautions, and things are starting to look like they're under control. But with the stock market reopening in China, there were some dire results because everybody, when there's fear in your life, then you respond by acting with fear with your finances as well, because everybody looks for security. And so nobody was willing to put any money on the stock market. And so China saw a very, very big dip in their stock market when they reopened. And so because of that, if that continues, we think that might actually have an inverse effect on us and make us rise up because they are one of our biggest competitors on the world stage. So those global politics are always happening. There's always so many factors going on that could positively or negatively affect the market. Thankfully, what's happening now looks like it's going to be a boost for the market in the coming weeks.
That is good news. In the wake of something that's not so fortunate, that is good news, though.
Absolutely. So just kind of summing it up, everything's looking good. We're still at this really great high. We are a little bit higher above that line than we want to see for the stability that Tayler was talking about. We want that support, but it looks like the market is properly correcting. And we'll be back next week for more updates.
Of course.
So we hope that you enjoyed this, and we hope that you tune in next time.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.